Welcome to another Wall Street Informer production on WSI TV.
Welcome into another weekend wind down edition of WSI TV. I'm Jordan Bishop. I'm here today with Sean Bauer. How are you doing today, Sean?
Yeah, doing very well, Jordan.
That's good. We've got a great episode for you today. This tool that we're going to hand you is one of the market's best profit-making tools. When the market turns down, whether it's just for a short time or it's long-term, this could really help you rake in the cash that you've been looking for.
Yeah, absolutely. And every trader or investor, or just the average man on the street, knows whenever you're trading stocks, you think of it as, I'm buying a stock. I'm buying Apple stock. If that goes up, I make money. But there's also another way to trade these things, which is, we call it just buying in reverse, but it's short selling for those of you who are maybe new to trading or you don't know what that is.
Exactly. So the basics are, if you think a stock's going to go down, you would short sell it for the price, and as that stock goes down, you would then close out your trade and the profits would be made from how far that stock goes down.
Right, yeah, and again, I'm just going to keep bringing up, it's buying in reverse because it does get a little bit complicated whenever you think about it. You're actually borrowing shares of a stock and then selling them, agreeing to buy them back later. Don't get too confused about it. Think of it as buying in reverse. You just make money whenever the stock goes down.
Exactly, and the way you'd place that order is the exact same way you place a buy order, except you'd say, you want to short sell Apple or whatever you're looking to short sell.
Right.
But the great thing about short selling stocks is most of the time, stocks go down a lot quicker than they come up.
Yeah, absolutely. I mean, it's like gravity, how that works. And especially whenever the market's either sideways or going down as well, it's just easier for a stock to fall. For a stock to go up, it needs buyers. It needs that buying power pushing it up. For a stock to fall, it doesn't really need a ton of sellers. There are always sellers. It just needs the buying to stop, basically.
Yeah, big lack of buying will push it down, and then you'll see it fall even faster when the sellers do come in, And we advise never to short sell in a bull market.
Right.
It's just not very good trading tactics.
Yeah, it's buying in a bull, short selling in a bear market.
Exactly, and most people, you'll find when the bear market comes around, they'll just get out of stocks, usually too late after they've lost a big chunk of their cash, and they just sit there and wait, and bear markets can last, they're not usually as long as bulls, but they can last 2 years or so.
Oh, right. If you want to be either on the sidelines or losing money for a year or two, go ahead. But whenever you're short selling, even if we keep saying cash is a position, and of course it's better to be in cash than to be losing money, but whenever you can be making a lot of money very quickly whenever the market's crashing, why not use short selling?
Yeah, and a lot of people, there's a bad stigma around short selling. When the market's going down, I've heard things like, short selling is unpatriotic and all that stuff. There's an ethical barrier that people put up, and they don't want to jump in on it.
Yeah, for some reason people sort of feel bad about short selling. It seems weird to be making money whenever a company is going down, whenever their shares are going down. But somebody's making money on that. It may as well be you. It may as well be us, Jordan. So, that's just something, if that is a barrier for you, actually it's really easy to get over it whenever you start seeing the money come in.
Exactly.
For whatever it says about me, I really enjoy making money short selling. Making money on something whenever it's going down, there's just something about it.
Exactly, and unless you're Warren Buffett, your short sell isn't going to push the stock down any further. The stock's going to go down, as much as it wants.
Yep.
You're just basically hopping on that train, and then you hop off when you reach that profitable destination.
Yeah, absolutely. If you're not using short selling, it's basically half of your game as a trader is left out. So buy whenever the market's up, short sell whenever the market's going down, and you're going to make a whole lot more money.
Right. A perfect example of that we spoke about the other week. Jesse Livermore made all his money off short selling. Don't be as emotionally connected to your trades as he is. Short selling is such a fantastically profitable tool. And if you're not using it, you're missing out on so much money, as we said. Watch out for our recommendation services. Watch out for our short selling recommendations within those services. And when we start talking about short selling in our articles, then you'll know when to do it. Don't do it right now, but it's good to know and be prepared for when that correction or that bear market does come around. And you're basically right now you're equipped with all you need to know about short selling. So thanks for being with me today, Sean.
Sure.
We'll see you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.